Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we get started, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today I'm happy to welcome Terry Papineau back to the program to chat about uranium. Terry, welcome back to the show.
Thank you, Jesse, and cheers from French River in Ontario, Canada.
Well, cheers from Novi Sad, Serbia. And it's been a while since we last talked. So I want to start with getting a broad sector overview from you and asking you what are the main tailwinds you currently see working in uranium's favor as we sit here today?
That's such a great question, Jesse, and it's such appropriate. We're at the end of the month in August. And as you know, I've been following the sector since, studying the sector since 2016. And it's never been better. Like the sector is just poised to really take off. We've seen that all prices for all products, all services in the nuclear fuel cycle are up for the month at a time when the summer is usually like a really quiet time. So all prices are up for products and services in the nuclear fuel cycle. The We just learned that another 1.6 million pounds has been signed into contracts. So we're at 119.6 million pounds for the year so far, and we still have September, October, November, 4 months to go. And usually the last quarter of the year is the busiest time of the year in terms of contracting. The World Nuclear Association conference is next week in London. That's also usually a catalyst for a lot of activity in the uranium sector. I mean, just good news. Before it was, you were lucky to get a piece of information on anything related to nuclear, maybe once every 3 weeks or once a month. Then it became, once a week, which was really good. Now we're getting sources of information, two, three pieces of 4 or 5 pieces of information per day, which 99% of them are all favorable for the nuclear industry and the uranium sector in general. So, I mean, I I have not seen as many, positive factors, such a great tailwind for the nuclear and uranium sector as we're seeing now, and heading into really, the best time of year where we've seen seasonality. If you study the charts, Sput, which is a vehicle that buys physical uranium, has been at a pretty steep discount to NAV all year long. Yesterday, for the first time in at least 7 months, has went above, went into a premium to NAV. Was able to issue shares yesterday, bring in new money. They didn't stack yesterday, but I mean, you know, as soon as more money flows into Split and they can issue more shares, break in more money into the fund. So and this brings me to the spot price. I talked about contracting levels, but when you look at the spot price, with almost no activity from the financial players, certainly Split has not purchased any uranium since February. um, the price of uranium has gone up, and right now we're flirting uh, with $60 uranium. We're at 59 something, just close to $60. I mean, so the price of uranium has been strong in the summer where it's normally weak, and just like all systems are go here. We got real big green flashing lights here, so it's going to be quite an interesting fourth quarter.
Absolutely agree with you there, but I would like to look at the bear case if there is one. So, conversely, are there any headwinds or risks you see, either short term or long term, facing the sector that you think investors should be aware of?
Short term, I believe that the greatest risk to the thesis is, of course, a nuclear disaster. And I think that the worst type of nuclear we could have is if one of the reactors in China, where they're building quite a few of reactors in China, if they find out that there's a severe flaw in one of their designs and they need to put a halt to their nuclear program, I think that that is, in my opinion, the biggest bear case in front of us in the short term and midterm, probably. In terms of long term, depending on if we did have a nuclear accident, I really hope we don't. But I mean, depending on the event, there's such an increased demand for electricity worldwide now. Um, you know, governments, environmental groups, different countries are realizing that for governments to achieve their goals with carbon free electricity, nuclear has to be a part of the mix, and it just can't be done without nuclear in the mid to medium term, I would say, and long term. And long term, other new technologies. I mean, people talk about fusion. I think it was last fall when they actually were able to achieve fusion for a small amount of time there, but it's so costly. It's so far ahead. We're not even close to being there. So long term, I don't see really any headwind to the nuclear industry, barring a a catastrophic nuclear event. Heaven forbid.
I spoke with Justin Hune recently on Sweden's plans to build 10 nuclear reactors, obviously very bullish for the direction of the nuclear industry. But I want to get your thoughts on announced plans to lift the country's ban on uranium mining. And I want to read a quote from an article on mining technology. It says Sweden accounts for 80% of the EU's uranium deposits and already extracts uranium as a waste product when mining for other metals. So could this bring a sizable amount of new supply online? And in your estimation, how far do you think we are from Sweden actually producing uranium?
That's a great question. I don't have a lot of information on the Sweden or the Swedish uranium mining industry. But what I do know is that if you bring on the known top producers and the mines that are on care and maintenance, if you bring all those back to full production, we still need more production. So we need to bring on some new mines. There's some mines that have been on care and maintenance for quite a while now. They need to come back online, and we need to develop new mines. There's a lot of ifs and hypotheses in what Sweden could do, but we certainly need more production. So in my humble opinion, I don't think that it would have a huge impact on the supply demand imbalance that exists at the moment. And I don't see that as being a headwind to the uranium sector, fundamentals in the short to midterm.
Well, let's talk about the coup in Niger. Obviously, something that has affected a lot of investors. It's wiped out a lot of value for uranium stocks in the region. Now, there have been several coups over the course of Niger's uranium mining history, and thus far, it hasn't affected uranium mining in the region. Could this time be different? Do you think investors should have cause for concern over the long term?
It could certainly be different. I don't have a crystal ball. No one does. And, you know, one of the most knowledgeable people in the sector, Mike Alkin, had a podcast in 2017, 2018 called Talking Stocks Over a Beer. And he would talk about, geopolitical risk all the time. And back then it just fell on completely deaf ears. But this coup in Niger is a good example of the risk that exists to the supply of uranium. The demand is it seems fairly strong and certain, but the supply, there are risks involved, and this is an example of it. And if we go by what's occurred, historically, or in history, when there were coups like this, as you mentioned, supply was not disrupted. There seems to be a little bit more um, sort of conflict, especially with France in Niger, and France with Orano had a great stake in Niger uranium mining. So it could have an impact. However, I don't think it's going to disrupt the supply. I think that what we're kind of seeing now is, and what's happened in Kazakhstan with Kazatomprom, which I think is a far more important factor geopolitically, is that it's as though there's like kind of two camps that are forming with regards to uranium mining. There's the producers that will be available to kind of the Western friendly countries. And now you've got sort of the BRICS, Russia, China countries that are staking their hold on uranium production in other countries. So, I don't think that production is going to be reduced. I just think that it's like it's utilities are shifting where they will be obtaining their uranium on a go forward basis.
So, what is the lesson that investors could take away from the coup in Niger? Obviously, no one loves to see their stocks get cut in half. As a global atomic investor, I certainly felt the pain. But on the flip side of that, all the other uranium equities I had in my portfolio actually rose after global atomic fell drastically. So, I think for myself, the lesson was to be geographically diversified. Do you agree with that, or do you tend to stick to more quote unquote stable jurisdictions like the Athabasca Basin, United States, when it comes to your own investments?
Yeah, I absolutely agree. I absolutely do agree with that. And I've never been shy of sharing what my portfolio strategy has been. And, for a specific reason related to my trading platform, I wasn't able to get into Australian specific listed names. But yeah, I think diversification in terms of different jurisdictions is important. I also think that diversification in terms of the different investment vehicles that are out there, in terms of producers, developers, explorers, physical royalties, that kind of mutual funds, that kind of ETFs, that kind of thing. And I also think that one of the other important lessons that I hope will play out with time, and will be proven to be true, is when you buy, a good asset with good management, there will be conflict and turmoil, but in time that value will be, that value will be recognized by the market, and shareholders will be rewarded for their patience. So the other thing that I think investors should understand here is patience. You know, I'm not telling people what to do with their investments, but I have a position in Global Atomic, and I haven't traded it. I still hold it, and I think that someone with much more experience and knowledge related to geopolitical risk, Rick Rule says it best. Like, he's made a lot of money in different sectors, and there are areas in the world where we think there is less geopolitical risk. Well, depending on what laws are there's still some risks involved. And anyway, so I think that this is my sort of how I've decided to play it, is that I'm just being patient with it, and I think that with time that situation will resolve itself. That's what's happened in the past, and I'm hoping that's what's going to occur again in the future. Um, Now, one of the things I wanted to talk about is Kazatomprom with regards to geopolitical risk. Is that you've got the world's largest uranium producer, and I think that there's some things that have been going on in Kazakhstan and with that company that people have failed to either recognize or give some thought to, is the fact that a lot of their production actually, some deposits have been basically sold to or taken over by Russia. And you've got some of the top executives at Kazatomprom that basically quit over the pressure, and the way that transaction, that whole thing happened. So to me, that's another example of what I was saying a while earlier. It's like it's now, the different sort of factions out there are sort of determining, taking control of some production and deter. So the production is not going to stop. It's going to be allocated or given to or taking, like the, they'll be taking that production. So, and it's like there's a west and east kind of separation that's going on here. And I think that there's something going on with Kazatomprom, but that's just my personal opinion.
Well, I want to talk about the spot price of uranium because it continues to grind higher and we're seeing it get closer to $60 a pound. So, in your view, what are the main factors that are driving the price action on the spot market? And could we see it rise sharply over a short period of time, similar to what was seen in the last bull market?
Well, I think that many of the people, or of the investors in the uranium sector, are aware and are in the sector because of the fact that it's a sector that can move extremely violently and rapidly in both directions. And there are different periods of time with the uranium price where that's occurred. Uh, Again, Rick Rule has talked often about how, one of the best sort of investment rides of his life was the last uranium bull market. From, let's call it, you know, he he says that he started investing in some companies in 1998, and he rode it till 2000 and whatever. But he saw the price of uranium go from $9 a pound to 130, almost $140 a pound. In that period of time, we saw the uranium sector, or investors. I didn't take advantage of that at the time, unfortunately, but they saw the number of uranium companies going from something like 440 at the beginning to 450 to 500 in that span of time, and returns of some of the lowest returns are something like 22 to 1. 22 baggers, which was the lowest returns in some of those companies at that period of time. So I think that some of the investors in the sector right now are kind of hoping that history will rhyme, and that the spot price will rise quickly again. We talked a little bit about the fact that, with very little financial uh, players involved in the spot market, the spot price has risen and it's done very well this year. I think it's the best performing commodity so far. And we're flirting $60 a pound here. And so, and we're entering into these, there's a seasonality to the uranium market. And typically the fall is the best period of time for uranium equities and uranium prices. So, this year, I think there's clear evidence and proves that we're in a uranium bull market right now. And, with very little transactions on the spot price keeps going up. And what's occurred in the last uranium bull market as well. And I think this is a bit different than other commodities, or what people believe should happen, is that when the price of uranium starts going up, those that have uranium hold on to it, because there's no alternative to uranium. You need uranium. The setup right now, and don't take my word for it, just listen to any Cameco conference call, quarterly conference call, or other people that are more knowledgeable in the sector than I am. the setup is better than it's ever been. And this uranium bull market, it's starting at a point where, like let's call it $30 or $18 a pound when it started. But where we're at now, and what we hope will happen going forward, it's never been in such a great starting place. So I truly believe that we can see very significant upward moves in the spot price, and uranium equities usually follow suit. And a very good example of that is in the summer of 2021, when Sprott Physical Uranium Trust, when they took over what was Uranium Participation Corporation in August, and then money started flowing into Sput. Sput started buying uranium. When they started buying uranium, the price of uranium was $30 a pound in August 2021. And in the span of about 6 weeks to 2 months, they doubled the price to $60 a pound. And in that period of time, the uranium equities tripled, quadrupled. Like it was fun to watch. Unfortunately, a lot of people got into the sector at that time and have been extremely disappointed since that time. And I understand that. But as many people have told me, I've seen the value of my portfolio go down 50 to 60% in that period of time. I didn't sell anything. I held on because I'm not a trader. I'm in here because I believe in the fundamentals. I'm convinced of that, and it just keeps getting better. So yes, I do believe that we could see a very strong movement in the spot price.
And that's great to hear about the time horizon. I think a lot of people get into the space or into investing in general thinking that they're going to be able to profit in a short period of time. But you're playing a long game here when looking at the fundamentals and the setup for the sector. And uranium, like many commodities, is very volatile, as you also explained earlier. So you have to be able to stomach that volatility, or just buy an ETF, figure it out. But you've got to know that those sort of price swings can happen, and keep your eyes on the long term outlook for the sector. So I want to switch from the spot price now to long term contracting, because that is actually where the majority of uranium is transacted. And I want to get your thoughts on a tweet by Mart Walbert, aka Yellow Bull, on Twitter. He said, when speaking to uranium producers and developers, it's becoming increasingly clear that they are looking for market-related contracts instead of fixed prices. Why do you think that is? It's because they see where the puck is going, and it's going upwards and to the right. This echoes sentiments from some people I've spoken to, John Cash, the CEO of UR Energy, and I've spoken to Mike Alkin on this show as well. Both of them pointed to the fact that contracting terms are really starting to favor the seller in the market today. Are you seeing this trend as well? And do you see it accelerating as we move forward?
Absolutely. I listen into all Cameco conference calls, and I've seen the progression and the different messages that they've been saying in those conference calls. And I remember, I probably 3 years ago, they were saying, well, we're looking for term prices with a four handle, and they had been saying that for a little while. And I asked a question. I can't remember if I called in or if I asked it. No, I think I called in, and I said, well, given the fact that you've been saying you'd be happy with the four handle for the last 2 years now, and as we're moving along in time, like shareholders, you need return on capital. Like shareholders have been patient. You need to make money for your shareholders. Prices are going up. Blah 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 blah. Like, shouldn't the price be moving to a higher price? And just given the fact that everything now is way more expensive, nothing is simple anymore. Like, so I truly believe that. So I used that Cameco example because I felt that the longer utilities were waiting to contract, the more that placed the producers in the driving seat, the more it became a seller's market. And I think that that's even more the case now today. And the fact that spot price has risen to almost $60 a pound, the fact that, like now the whole nuclear sector is popular once again. We're getting, announcements of new builds, all kinds of great news for the sector. That all points to a certain demand or increasing demand. Supplies at risk. In that kind of situation, prices have to go up. And you know, for there's like I said earlier, even if we restart all the shuttered mines, it won't be enough. That full production will not be enough to meet demand, projected demand. And so that means that new mines need to come online. So that means that the prices for those new mines, those projects to build a mine is very capital intensive. So you need money. So for you to be able to get the money to build your mine, you need to show that you're going to be making money. So they need higher prices. They need contracts at higher prices. So the current producers that have been patient, have done the work, have the assets, they see the writing on the wall. Listen to any Cameco conference call, like they're saying it. They know that prices are going higher. They have to. It's not a question of they want them to. They have to go higher. So the producers then why would they sign? Where you've had shareholders that Cameco has done very well this year. It's performed extremely well, its share price. But the investors in Cameco, it's been a tough 10 years since 2011. And so shareholders have been patient. They need to be rewarded for that patience. I'm not saying that, utilities are going to say, hey, yeah, okay, yeah, Cameco shareholders, we're going to, but what I'm saying is Cameco is working for their shareholders and other producers as well. John Borshoff just said recently that, he's looking for at least $65. So, I mean, why would any self-respecting, competent CEO or company sign a contract at, let's call it $60 when, all signals are pointing to the fact that in the future that price is going to be $80 or $85 or $90. Now, producers also need to maintain relationships with their customers. So the whole contracting cycle is very it's difficult to know the terms of contracts because there's non-disclosure agreements around them, and the reporting on it is not very, very good either. So it's very difficult to get a sense of what the terms of those contracts really are. But what they're trying to do now, the producers, is basically have a larger portion of the contract geared towards a market price, which the producers know is going to go higher, whereas the utilities know the prices are going higher as well. So they're looking for more of a term of fixed price. So it's a careful dance. It's a careful negotiation. It's a negotiation between the producers and the utilities now. And you know there's just no reason to give away your production at a lower price when everyone knows that prices are going higher.
So could you share with us now your current allocation in the uranium space? So if you could fill us in as much as you're able to on your own portfolio, where are you seeing opportunity in the sector right now?
Well, there's a lot of opportunity in the sector right now. Like I said, prices have gone down considerably in the equities. Now, some of those have recovered nicely in the recent weeks, like in the last month or 6 weeks or so. But there's still a lot of opportunity out there. Now, I'm fully invested, so I don't have money to deploy at the moment. But my portfolio, I started out with the sort of the majors in 2017. The more established names. And as my information in the sector and knowledge grew, I was willing to speculate more and take on more risk because I believe that the returns might be worth that added risk. So I shifted a larger concentration of my portfolio into explorers. And I would say that about 60 to 70% of my portfolio is in a basket of explorers. I have 9 or 10 different explorers. Most of them, if not all of them, are in the Athabasca Basin. And the reason why I did that was because at the time when I was deploying my cash, like between 2017 and let's call it 2021, um, the you know I saw that I didn't know which one of the explorers would make a discovery, if at all. My speculation or my bet at the time was that there's a big supply demand imbalance. The price of uranium needs to go up. When the price of uranium has gone up in the past, the equities have gone up tremendously, and the group of companies that went up more compared to the other ones were the explorers. So the higher the risk, sort of the higher the return. Now you could have big like a big grand slam, but you could also have some strikeouts in there as well. But my sort of strategy was, as uranium price goes up, as money starts flowing into the sector, that's going to lift all boats. And again, I was looking at companies in 2016, 2017, 2018 at the complete down bottom of the bear market, where these companies, just for them to still be around, the explorers, was a feat in itself, because money was very hard to get by at that time. All these explorers, they don't make any money, they just burn money. So, and you have some of these explorers that were able to acquire projects, stay afloat, just like keep the lights on, and try to keep advancing their projects, or their different. So that was my strategy. So I invested in 9 to 10 uh, explorers in the Athabasca Basin, not knowing if any of them would make a discovery. And you know, and so just saying, but if one of them or two of them could find something pretty good, then it would be a good return for me. Luckily, I have a few of them that did quite well. Probably my best performer is ISO. In that group is also Fission F3 now, which made a discovery last year. There's Find in that group. There's Sky Harbor that's doing very well. I'm really impressed with Sky Harbor, impressed with Canalaska. So that's kind of companies I invested in. Pure Point, Standard Uranium. I know people are going to write something about Standard Uranium, but so that was my strategy. And I also invested outside of Canada into the US, into past producers and developers. And I also have some investments in Africa, in Niger. So developers in Niger. So that was my strategy. A large portion into explorers and a smaller portion into developers or past producers in the United States and Africa.
Awesome. Well, thanks so much for sharing that with us, as well as all the knowledge you've provided over the course of this interview. Before I let you go, do you have any final words you want to share about the uranium sector? And if there's anywhere you want to direct people online where they can hear more from you, feel free to do that as well.
Sure. Well, people have reached out to me on Twitter or X now. They can direct message me. Um, and just the final word is, you know, um, I'm not a trader. So, people that say, well, he didn't sell anything or blah, 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 that was my strategy. And, as it's been a rough ride. It's been an extremely difficult ride. And, when I look at the value of my portfolio when it was at the top, and the value of the portfolio when I was at the bottom, that's a pretty huge, you know, downward ride. And it's easy to get discouraged. But if you take the time to understand like the fundamentals in the sector, and just to kind of study what's happened in the past 6 years, Like it's just, and I say this all the time, it keeps getting better and better and better and better. And that's that spring, like I don't know how tight it could get, but it's getting coiled tighter and tighter and tighter. At some point in time, that spring's gonna let go. And we've already, like when I started investing in the sector, we were back down. Remember, I talked about the number of companies. It's in 2001 to 2007, they went from 40 to 450 companies. When I started in 2017, actually investing in equities, that's where we were at about 40 companies, and we're over 80 companies now in the sector. So we've doubled in that period of time. The other thing to note is that the uh, the entire sector in 2007, when it was at its peak, all of the equities, the market caps of all the companies in uranium was about 150 billion. So, and like, I think this is important. Like, that's in 2007. That's 16 years ago. Okay. So, and we're sitting only at about 46 or 47 billion right now. So just for the entire sector to go back to where it was in 2007, I'm not saying it's going to go back, but it's a three bagger, in general. And will it do the same? I think it will. But when you look at when money decides to flow into a sector now, like the valuations of different companies in different sectors, like you've got companies that are valued, way higher than the entire uranium sector in 2007. So I think that if you take the time to really understand the sector and see how the fundamentals are important, and that's the true story. That's really what's going on here in this sector. And if you can be patient, I think we're going to be rewarded for that patience.
Well, thank you so much for joining us today, Terry, and sharing all your knowledge with us. I will put a link to your Twitter in the description below for people who want to follow you there. And I definitely look forward to sitting down again and talking uranium once more.
It was my pleasure, Jesse. Thank you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.